All right, let's get right into it. We're breaking down India's union budget for 2026 today. And let me tell you, this is way more than just a bunch of numbers on a spreadsheet. Think of it as a major strategic pivot for the entire Indian economy. We're talking about a calculated, long-term vision that really signals a huge shift in government policy.
So here's how we're going to tackle this. We'll look at the big picture strategy first, then what it means for investors, how the country's infrastructure is set to change, where India fits on the global stage, and finally, what all this means for you and me on the ground. Okay, first up, the big idea. At its core, this budget is all about a major strategic shift. You see, the government is making a very deliberate choice here. They're moving away from the usual short-term feel-good measures, and instead, they're doubling down on long-term economic stability. Yeah, future-ready Bharat. That was the tagline, the clear message from the finance minister. It's a signal that they're steering the ship away from those easy populist wins. The real focus? Building a tough, competitive economic foundation that's meant to last.
And just look at the sheer scale of this thing. 53.5 lakh crore rupees. That's a massive number, right? And it's this huge outlay that's going to fund all the major national projects and new policies we're about to get into.
But here's a number that honestly tells a much bigger story. 4.3%. That's the target for the fiscal deficit. Now, why does that matter? Well, it shows they're staying on the path of fiscal discipline, tightening the belt just a bit more from last year. And you better believe global credit agencies and big international investors are watching. This is a huge signal that India is dead serious about keeping its economic house in order. All right, let's switch gears and talk about what this means for anyone in the market, because this budget has some changes that are going to fundamentally rewrite the math for both day traders and long-term investors.
So take a look at this. The government is making it more expensive to trade derivatives, plain and simple. They've hiked the Securities Transaction Tax, or STT. And for options traders, that jumped to 0.15%. Wow, that is not just some tiny adjustment. It's a major change to your bottom line on every single trade. But you have to ask, right? Is this just about collecting more tax? Probably not. So what's the real game plan here? What kind of behavior is the government trying to encourage, or maybe discourage? And the answer is pretty clear. They're trying to pour some cold water on what they see as a gamble-heavy retail market. You know, that super fast in-and-out trading. By hiking the STT, strategies like scalping suddenly get a lot harder to profit from. The whole idea is to push people away from speculation and more towards actual long-term investing. It really makes you wonder, is this the end of an era for scalpers? And what does this do to market liquidity in the short run?
And that's not the only big change for investors. Check this out, the share buyback tax. This is huge. For years, companies could buy back their own stock, and it was a super tax-efficient way to return cash to shareholders. Well, that loophole is now closed. Buybacks will be taxed at the shareholder level, just like capital gains. What does this mean? It probably means we'll see a lot more companies, especially those cash-rich IT giants, going back to good old-fashioned dividends. And for investors, that changes the entire calculation for your total returns.
Okay, let's zoom out from the markets and look at the big picture, the massive plan for building out the nation's infrastructure. And the really fascinating part here isn't just what they're building, but how they're planning to pay for it all.
Look, the government is basically saying, our pockets only go so deep. The old way of doing things, just writing a check from the public treasury, is hitting its limits. So the new playbook is all about crowding in private money. It's like they're setting the table and making the meal so attractive that private banks and investors can't resist pulling up a chair and investing. And here's how they're doing it. It's a pretty clever three-step move. First, they know they're close to their own spending cap. So, step 2, they create this special fund. Think of it as an insurance policy. This fund provides guarantees for these huge projects. And that's step 3, it de-risks the whole thing for private investors. Suddenly, a massive, long-term infrastructure project looks a lot less risky and a lot more bankable. Now, of course, it's not just about the money. To really get that private capital flowing, they'll have to cut through a lot of red tape and make sure the political ground is stable. That's the real test. And just look at this map to see how ambitious this whole thing is. We are talking about seven new high-speed rail corridors crisscrossing the country, linking up all the major economic centers. The end goal here is massive. It's about building a truly modern logistics network that can slash the cost of moving goods from a whopping 14% of GDP all the way down to a much more competitive 8%. So this is the government's big, long-term gamble. The idea is that by creating this steady, predictable stream of safe bet infrastructure projects, they're building a kind of safe harbor for capital. It's an anchor of stability in the stormy, volatile seas of the short-term financial markets.
Okay, but none of this happens in a bubble, right? Every move India makes domestically is also a move on the global chessboard. So let's look at how this budget positions India in a world where global supply chains are being completely redrawn.
You've probably heard the term China Plus One. It's this huge global shift where companies are desperately looking for manufacturing hubs outside of China. And India is screaming, look over here. This budget is making a really aggressive play, especially by doubling down on its semiconductor mission. It's a loud and clear signal that India wants to be a major player in electronics and high-tech manufacturing. And this isn't just talk. They're putting their money where their mouth is. 40,000 crore rupees. That's the kind of serious cash they're pumping into the semiconductor mission. It just goes to show how strategically important it is for India to build its own chips and secure its own supply chains in such a critical industry.
All right, we've talked big picture, we've talked markets, we've talked global strategy. Now let's bring it right down to the ground level. What does this all mean for your personal finances and for a sector as vital as agriculture?
So, for anyone with a salary, here's the headline. No, they didn't slash the tax rates, but, and this is a big but, they did expand a key rebate. The bottom line is, if you earn up to 12 lakh rupees under the new tax regime, your effective tax is now pretty much zero. It's a really powerful incentive to get people to switch over to that new system. And there are a few other really practical, ground-level changes that are built around this idea of trust-based governance. First, for taxpayers, they've extended the deadline for filing updated returns, which just gives everyone a bit more breathing room. Second, and this is amazing for agriculture, they're rolling out something called Bharat Vistar. It's a multilingual AI platform that's going to give 1.7 crore farmers access to real-time data on everything from weather to market prices. It's a huge step in de-risking farming. And third, and this is a game changer for small businesses, all government-owned companies now have to use the Treds platform for their purchases. This basically guarantees that small suppliers get paid on time, tackling a massive cash flow problem that's held back so many for so long.
So, let's pull it all together. We've seen fiscal discipline, big changes for the markets, a new way to fund infrastructure, a clear global strategy, and some very real changes on the ground. What's the one big takeaway from all of this?
When you boil it all down, this budget is a calculated bet. It's a bet on long-term stability over short-term fireworks. The core belief here is that by being fiscally responsible, by creating a predictable and stable economic environment, you'll attract more investment and build a stronger foundation for growth in the long run. And that, right there, leaves us with the billion-dollar question. Or, I guess, the trillion-dollar question. The government has put its cards on the table. It's made a huge bet on long-term fiscal discipline. The question is, will global markets and domestic investors buy in? In a world that seems obsessed with short-term gains, will this long-term gamble actually pay off? That's what we're all going to be watching for in the year ahead.